Welcome to Trading Lounge and the US indices for the 16th of January, and starting with the S&P on the daily chart here. I want to go over a couple of counts and then we'll drill in and have a look at where we are with our trades and so on. So with this particular count here, it is appearing that from this high here that we do have a three-wave move to the downside here. And if that's the case, then we'll move back to this 61.8% here, around the 2700 area here. There is one glitch though for the downside here, is that from this high to this low here, the 61.8% retracement level here on the cash market would be 26.95, so basically 22,627. And if that's going to be the case, then the only sort of bear market that I can see that's left in here was this is wave 1 here, this is wave 2 here as an ABC, and then this being wave 1 down here, and then wave 2 sitting right here. So that's possible, and we have a very strong third wave coming down through here, and you know that's possible as well. However, in terms of trading, that we won't miss it because we will see the first 5 waves down and then we'll sell into the retracement at that point. So I am aware of that. But it's not really the strongest bias for the situation at the moment. So I'm just going to remove these here, but we'll look at this again on an intraday basis if need be. But otherwise, the move down through here would be a corrective wave, and it's possible to have this wave 4 sitting on this low here. If that's not the case, because we've got 3 waves here, then we can look for any of the moves down that start with 3 waves down. So we'd be looking at our 3 flat corrections, and that means that we would have 3 waves here, 3 waves here, and 5 waves here, coming back down to this low here, and then moving off from there. The other point that a move down here in 3 waves would give us a triangle pattern. So a triangle pattern would be the A wave, the B wave, the C wave, the D wave, and the E wave here, and then would move up from that point. So that would be the triangle pattern. So yeah, it could be any one of these, and it's just a bit. That's the way that wave 4s play out. They contain the most complicated corrections, and we just really need to be mindful. And I know from experience, it's best not to get fixed on a particular wave count in a wave 4, especially when it can be a variety of particular counts. So we need to drill into a particular degree of structure that we can understand, and we trade within that degree of structure, and that way we can stay safe within there. So let's just go into the 4-hour chart, and if we're looking for a move up into this space here, then we can just look at the 4-hour chart here. So we'd be looking at an A wave, a B wave, and a C wave here. So we want to move past the 26, 27 area here that I was talking about, and then move into this space up here for that. Okay, so that's the first thing there. The what we've been looking at here on the hourly chart with this move to the upside here, we need to look at it, or we can look at it like this here. So we know that from the low here, we can look at this as, let's just look at it as an A and a B and a C wave here first. That can take us to the 26, 27 area here, and that would give us the A, the B, and the C here. So that's a critical point here for this market, okay? And the count for that to the upside would be from wave B here would be 1 and 2 here, and 3 to here, 4 to here, and then 5 to here. So yeah, we can move our stops up into, well, we can move it right up into this space here for this. Of course, we don't really want to take on any other trades at this particular point. The other point within all of this, yes, the market is dancing at the 2600 here, but as you can see, it was the resistance, and now it's moved up and it's looking for support on this level. So it's migrating from resistance to support, which is a positive thing. Remembering that our 61.8% retracement level on the physical market, the cash market, is at 26.95. So yeah, that's there. The other point here too is that in terms of the trading levels, we have a medium level here at the 2,500, and then the next, which is the medium level, the next level up here is the 28 here. So essentially it's the Fibonacci numbers as a price ratio that work in really nice with the Elliott wave structure, because we know the Elliott wave structure works quite nicely with the mathematics of the Fibonacci sequence. So what I wanted to point out here though is between the number, we know that Fibonacci is 1, 2, 3, 5, and 8. So between 5 and 8 here, the 50% mark always plays out nicely. So this is really the closest, largest, most important number in the market, in my humble little opinion. So this 2650 area here is definitely something to keep an eye on here. So yeah, look, this is our count here. I also want to point out too that there is another possible count here. This is also too, you know, with stocks moving to the upside. Stocks all around the world, they're moving up. Some have moved up in 5 waves, some are still up in 3 waves. So we're really watching some of the stocks. Any of the stocks that have started to rally from this point here will be in the same position here for this. Just while we're here on an intraday basis here, this wave B here, I'm going to pick it up on a tick chart here, but when I look at that, I've got this wave B here on 1 degree smaller, so it will be in a green pattern here. But just to go over this here a little bit, so from wave B here, bring that down here, bring this up through here. So just quickly go over this count before we move on to more of a bullish count for all of this. So we've got 5 waves up here for 1 and 2, another 5 waves up here for 3, 4, and 5. So this is how I've got 1 and 2 here, okay? And then we've got 1 and 2 and 3 and 4 and 5 for 1 here, back for 2 and up for 3 here. Yes, we do have overlapping wave structures at this point, but I'm okay with that at this degree of structure, okay? I mean, I wouldn't be happy with that in a larger one. And so that gives us wave 4 and then 5 waves up here for wave 5. And then I did make an error here. I had this as the ABC pattern here, but it ended up being a bit larger, so an A and a B and a C wave here for this wave 4, pulling back roughly to the wave 4, 1 lesser degree. So we're looking at this upside here for the top here. So we're looking at this 26-27 area here. So here I was looking at this as wave 1 here and wave 2 here, and then 1 and 2 and 3 and 4 and 5 here. It's a little bit wobbly, wave 4 pulling back to the wave 4 of 1 lesser degree, and then up here. I'm also quite happy in a way to copy this here, to put wave 1 and 2 here as well within all of this here, which would take us a little bit high. But either way, we still need to, I can't draw on this side of the tick chart here, we still need to move higher though here. We need to take out this high here, and that will take us into this space here. So yeah, so there's also just you know, this is what the videos afforded to understand the wave structures and pull them apart. There is this count here that plays out okay as well. So this is just on a 2-hour chart. So from this low here, right, from the 2800 down to here, from this low here, we could look at this as wave 1 here and 2 here, and then 3 here, and A, B, and C for the 4th here, and then up for the 5th here. So some of the stocks have got this, so that's kind of can play out like that. So if we move over to the NASDAQ, but if we look at, well, let's have a look at we'll look at Amazon, but also just want to have a look at Google as well, Alphabet. So with Alphabet here, you know, looking at this is slightly different count here, but looking at wave 3 here and A wave here, B wave here and a C wave here. Because I can't count this up as 5 waves here, I suppose I could have this as a triangle pattern in here as an A and a B and a C and a D and an E here, and have that wave 4 here. That's possible as well. But it's okay as a B wave here as well for the time being, because if I count, up here from this low to this high here, there's 5 waves. There's 5 waves from this high to this high here, and then here. So 1 and 2 and 3 and 4 and 5 fit nicely here. So it can play out as an A and a B and a C here, taking the top out here, and then coming back down here as an expanded flat, and then we'd see a strong move moving up here. I don't really have a nice clean 5 wave structure up here, but we did call the low in on right in this space here. So let's just see how this market continues to move up, but it will make another high here, so you can trade that above there. Of course, it's always nice to have, this is a major trading level, so these are, next one down is a minor level, so 1, 2 and 3 here, and that's why if we ended up getting support on top of 3 here, then that would have separated the order flow from this level here, and we would have traded along again. But in this stage here, we'll have the arrival, the reaction, the first high above the level. So we'll see some sort of correction across here where we can look to go on. We want this as support. We don't want to buy into resistance here. That's just sort of stacking the odds against you. We want 100 to be support, not the resistance. So moving on to Amazon here. So you can see the 5 wave structure here a bit clearer here as well, so in this market. So this is up from the low here as well, with all of this as an A, B and a C here. So yeah, so this is sort of panning out to be more of a impulse wave here for all of this. So we'll continue to keep an eye on this, but we can expect this market to move higher from here. And with that in mind, looking at the NASDAQ here, looking at this here in terms of an A wave, an A and a B and a C for the B wave, and then 5 waves down for C. So we can have this into play here as wave 4. So the interesting thing here, there's this box and this box. So this first box here is the 61.8% retracement level from this high here down to this low here. So when we're looking at the SP 500, looking at this is down for 1, back for 2 here, down for 1 here, back for 2 here. Well, the NASDAQ is pushing higher here. And also too, I'd have to say that and the same with the SP 500 as well. If this was down for 1 and back for 2 and down for 1 and back for 2, that means that this would be the third of the third here. So it would be very unlikely for the market to, move through the 61.8% mark here if that was going to be all of this as a 1-2, 1-2 to the downside move. It just wouldn't be on the mark here. So I know lots of people are bearish on all of this, and that's fine, but I think it's just important not to marry a particular situation until the evidence is in play here, and you need to trade a degree of structure that you understand, and the setup is just as equally as important as anything else in the market. So I mean, here we can clearly see we've got a nice support here now, haven't we, for this. The market's moved up and sat there and tested and moved higher from that point. In fact, moved through the 61.8% mark. So we're looking at this next move here. We know that the 6.8 here is the next level here, the next important level here. Sure, there's important levels in here too, but in the bigger scale of things, from the medium level here, the 6.8 here is the next important level. You see it play out through here as well. I'll just go straight to the hourly chart here. I think we've got here. So I have been looking at this to the upside in 5 waves as well. So wave 1 here, ABC for 2 here, and yeah, so wave 3 onto this point here, wave 4 here, and then looking for wave 5 to move a little bit higher. I mean, we can't count this as 1 and 2 and 3 and 4 here because we've got overlapping wave structures on these degrees here. So this is obviously up for 1, back for 2, up for 1, back for 2. So this is still playing out to the to the upside here. So it's still got further to go here. So we can move those stops from under the level. We can move it up, take it just down below these highs there for the time being. We'll save that. So yeah, look, the 600 is important, the 700 is important, but this 800 here is more important in terms of well, not just the geometry and the fractals of the wave structures at that particular number, but yeah, number 8 just attracts more volume. There'll be more volume there as such. Yeah, so that's the one to watch. All right, that's it. Thanks for tuning in. Much appreciated. Cheers.